Okay, so this is a panel on AgTech investment, but probably even more interesting is what we would view the future of AgTech investment. So I want to, before I introduce the panelists, I want to just acknowledge one way we're already being innovative is that in global venture capital, and this was actually a big number to get to, but 10% of venture capitalists in the world are women. And we already represent 50% of that up here. So we're 5 times better. And the reason why that's important for a lot of reasons, but one of those is venture capital, similar to farming, is synthesizing a lot of information and then being able to make an educated guess. We can try to paper it up all we want to. It's a gut feeling. It's how you read people. And collectively, with a diverse group, we're going to be better at doing that and more likely to succeed. And I also want to point out, we've been doing a lot of thinking about this, but you guys at AgVA do a pretty amazing job. Everybody can hear me okay? I'm terrible, by the way, at this. You guys probably know, if you know me, I like to yell, and it's hard for me to be on the mic. So can everybody hear me okay? All right. And so I think it's important to remember how hard this is that we're doing. Picking companies at an early stage and investing in them, and that there's an extremely high rate of failure. And so first, I think you guys have done a really good job. Hopefully AgLaunch is adding value to that. But this job that we're doing sits outside of normal asset classes and is extremely difficult. So I'm going to introduce myself first, say a couple comments, introduce you all, and then ask you to say a few things more about your firm. So my name's Pete Nelson. Hopefully some of you all remember me because I came up here hat in hand back in 2019, and basically after being recruited by Jude with our sort of model around farmer innovation, and sat in front of you all, gave a whole keynote about as a small farmer and then ultimately getting into value-added crops and technologies, why this was important to me that we build something that's farmer-centric. And AgVA, since then, we signed an MOU in 2019 to work together between our organization, AgLaunch, and you all here to lead what we believe is the best way to bring new technologies to market in agriculture, which is having farmers vested in the success and involved in each one of the steps. So if you recall, or you're one of the board members and longtime members, we signed an MOU between our organizations in 2018 that just basically said we're going to find ways to continue to work together. What's that led now for you all is members now across the country that have gotten recruited into the organization, and it's led to us collectively building something pretty special, where we're running field trials this year collectively with your team and ours, 84 trials with companies in 10 states. And now we're building together a venture capital fund that'll take all of this work to the next level, including the legacy of Mark and others that have been at this for now over 25 years. And the heart of this, I said it back 6 years ago to this group, I'll say it again, what you all did, the legacy of this organization, by saying, we got to be in control of our own destiny here. We got to put our money and our corn into something that's productive and that we can control some of our own markets. That's the heart of this whole story. And what we're doing collectively between AgLaunch and AgVA, we think is going to emerge as a far better performer than any other effort in AgTech. So I do want to submit that as we get into this future of ag conversation, is that it's not functioning well now. And a part of it is because farmers and founders are not working together in the way that we could, and we're just at the beginning of building what I think will be the way that it happens, the actual, not as a group of farmers that's knocking on the door to get in, but leading how this all works. So I'm going to introduce the panelists, and I've got a few scripted questions and probably a few unscripted questions. So first, Mikayla Mooney. She's a venture partner at Ag Startup Engine. Obviously, you all have invested in that. She plays a key role in building and leading the organization's third fund. And her journey in AgTech began when she was 19. I enjoyed meeting Nora earlier, who's 12 and is, farming as part of, I guess, the 7th generation. Like, we're fundamental believers in that, in this idea that we can develop and build innovations. And her company developed a solar-powered food dehydrator for farmers. And as the CEO, she was able to get that technology into 50 countries. And so I just that's an awesome just start to begin with. And so now she's a venture partner at Ag Startup Engine. And then Jordan, who you know well, and we've come to know and love at AgLaunch. as a venture associate working for you all, but been actively involved with farming, similar to Spencer, which we think brings a really great edge. And then previously was with Climate Corps, and is bringing all that experience and the experience with RTK into that. And then Liz, that we've also gotten to know, and I'm happy to be on the panel with you as a principal at Next Level Ventures, and before that was here at AgVA. And then I'm just thrilled that you kind of keep moving in this direction that we've talked about, and are able to be a principal in this firm that I think $600 million into 45 companies, which is awesome. So that's our panel. It's going to be good. And I kind of prepped you on some of the scripted and non-scripted questions, but I thought we would start and work our way backwards with you, Liz. Just tell us a little bit more about your firm, and if you want to say anything from your perspective, Jordan, on AgVA, this will be a good platform, and then we'll get into the questions.
All right. Yes, it's good to be amongst familiar faces here today. I work with Next Level Ventures, as Pete mentioned. Next Level Ventures is a Des Moines-based venture capital firm. We manage over $600 million in assets today. I oversee our Midwest investment strategy, which now includes the launch of our third venture fund focused on investing in Iowa-based technology companies, but that fund will take more of a focus on AgTech and biotech-based startup technology companies. I've been in venture now for about 10 years, and my experience includes that here at Ag Ventures, which is really what pushed me into this next fund, which we will hopefully be co-investing with Ag Ventures Alliance as well. And we've done multiple co-investments with the Ag Startup Engine as well. So this is a very exciting community to just be a part of, and excited to be here.
Yep, so Jordan Colby, hopefully you guys know me for the most part, but I've been with Ag Ventures now for 3 years. My background is definitely like farm kid, love everything to do with the farm and being outside and staring at crops or staring at animals. And I 3 years ago, I didn't even really understand what venture capital did. And so I was able to kind of stumble into this role with the help of Spencer, obviously, and kind of apply some of my background in thinking to looking at new opportunities in ag, and really learning to understand Ag Ventures' mission to increase farm profitability was kind of changing for me. I hadn't really had that opportunity in the past to think about being at the ground level of being part of innovation in ag. In the past, we'd always been a part of, salespeople coming through and selling a new product, but we knew nothing about it. We were just supposed to try it. So this is a completely different role, and I love doing it. And on the Ag Ventures side, we do focus on very early stage companies. A lot of the times it's a founder with an idea, and they just started working on a project or just came up with a new technology, and that's the fun part for me. And really being able to kind of help shape the direction and provide the best input that we can. So,
Mikayla, Mooney, so with Ag Startup Engine, so a little bit on Ag Startup Engine. We started back in 2017, really focused on providing early stage capital and mentorship to founders solving challenges across food and ag. So we typically write pretty small checks, but similarly to Ag Ventures Alliance, we've got a great network of farmers, producers, small to mid-sized companies in ag, and they serve as a sounding board to help us evaluate companies, but then are also willing to roll up their sleeves and help founders take things from an idea to pilots and get to commercial launch faster. So I jumped in with the team about 1.5 years ago to help raise our third fund, which will primarily be focused on follow-on funding. And then I work with 3 other past founders, so we take a pretty founder-centric approach in how we operate the fund.
Great. Well, my first question for you all is to try to understand, in a space that's really, really hard to get in. It sounds like you might have kind of almost stumbled in it, Jordan, thanks to Spencer, but this is not easy to get in. We had one of our associates, Skylar Dalton, decided to go back to grad school and realized all of her peers at an Ivy League school could not get internships in venture capital firms. So that's how, if you guys have been in this for a minute, this is a very difficult space. I just wanted to go back this way and kind of go why do you want to be doing this? Why put yourself through this? What's driving you to do this as a career as opposed to something more dependable or whatever?
Yeah, similar to Jordan, I stumbled into venture. So I had started the food tech startup. We were scaling that. And then when COVID hit, it just kind of torpedoed everything. So we wound that company down. And I was looking for the next thing to do. We completely bootstrapped that company. So had never thought about venture capital, knew nothing about it. But I thought it would be a great opportunity to work with early stage founders, maybe help them avoid some of the mistakes we made early on. And realized I loved being on this side of the table. The skill set, I think, is different from being kind of founder operator to being on the investor side. We spend a lot of time looking at a whole bunch of different solutions. So you're spending more time kind of high level than going very deep, but we get to see some really, really cool technology, and we get to spend our days with people who are incredibly passionate about solving problems across food and ag, and I think that's one of the most rewarding things. You're just surrounded by this energy of people who want to get out there and do things.
Yeah, that's a really good way to put it. I think for me, the reason I am staying, and because I was introduced to it, didn't really know a lot about it, but one of the things I found was when I get to talk to people in this space, and it really is its own ecosystem. Crazy innovative people, super impressive people, and some of these people that we get to work with, the founders, are one of a kind and doing something really amazing in ag. And I guess it's just inspiring overall, and it makes me strive to do better in my role, and I also try to put myself in their shoes sometimes, and I wonder if I could do something like that. So it's just a fun environment to be in overall.
Yeah, just to add to that, I mean, when I get into venture, I knew I wanted to go into investing, but I didn't know what path that was. I graduated from the University of Northern Iowa. Venture capital was not an asset class that was here in the state of Iowa at that time, so I actually had to leave the state of Iowa to get a start in venture. But I came across venture as a career path because I had watched a documentary about something ventured about the creation of venture capital and the founding of Intel at that time. And that was what pulled me into, I take an altruistic view of the world, in that I was like, I want to invest in people that are looking to change the world and disrupt things. And then my experience here at AgVentures, that was the first time I was applying my venture background to agriculture and moving back to Iowa. You know, I grew up in a rural part of the state, but had never, aside from like 4-H and things like that, I never had a direct, tie to agriculture. But that was when that altruistic view came together for me of these are founders and people that are changing, feeding and fueling the world, literally, right? And so what's more altruistic than that? And so all of those dots finally connected for me, my upbringing, my interest in venture, investing in people that are changing the world. And so AgTech has been a fantastic way to apply that interest for me.
I will let you all choose who answers the next question, but it's going to be a two-parter. What's one of the deals you've looked at that you've most liked or most proud of that thought was awesome? And the second part, if you want to, what is something that's been a disaster? Either the pitch was so out there crazy, or you saw immediately. So if you want to do that. Now, I will tell you, I've done this every time I've done a venture capital panel. And like, if you're corporate, you hate that question because you do not want to answer. So you can choose, but just something that's out there. Don't throw anybody under the bus, but just if you got something wild or crazy. I'll give my failure one real quick. We had a company that came in, put $1 million into it, and they had so trained. It was one of the early drone looking at imagery and analytics. And what we kept explaining to them is, we have farmers already working together. Let us help you. Don't do what you heard in Silicon Valley, go try to sell them. We're going to make some introductions, but the best thing to do to them is say, here's what we know, here's what we don't know, and we'll give you a little equity or some kind of way to make this work, but we're going to work together on this. And we saw it happen. We took them to one of our bigger farm groups that's down in the Delta, 25,000 acre footprint between these 6 farmers together, and they couldn't help it. And you saw the whole thing. They just couldn't help it. For $10,000, we can solve all your problems. This is going to work perfectly, and you can do this and this. And I'm like, oh my God. And what they missed was an opportunity that they could have had a partner that would still be helping them right now scaling. and helping them build something, and they blew it because they just couldn't kind of understand the power of being able to build these kind of partnerships early, and they had bad advice. So that would be an example of one that, you know, we saw it melting down and it just started crashing, but with $1 million in. So who wants to go first with a success or a failure or both?
I would say, you know, ones that have been really interesting to us, we just made an investment, our first investment out of our new fund in a company called Genvax. I believe AgVentures was part of that, right? But I think the reason that that's so interesting, and that's, you know, obviously not crops that's on the animal health side, but that's a founding team that has had a successful exit in the past. And they are thought leaders in the space of taking the next generation mRNA technology and applying it to animal health. It's already well established on the human health side, and they've found that you can take what works on the human health side and you can apply it to animal health. And so you've got a great founder market fit, and technology that is actually disrupting the standard way vaccines are delivered to animals today. So that's really exciting. I would say, you know, anything with automation right now is really interesting. Even looking at like the different layers of automation technologies. So not necessarily companies that are looking to be the manufacturer of an automated piece of equipment themselves, but looking at technology that can go into kind of any OEM and help them automate and commercialize new technology or new equipment is interesting. I know one that I was really intrigued by that I think I sent your way, Jordan, was Insignium here. We unfortunately were not able to invest because they didn't have any presence in Iowa at the time, but what they're doing is obviously really important to crop protection. You talk about precision technology. Those are interesting. Failures, I'm trying to think of, you know, one specific, I would just say like pitches that to me are failures are when the founder has absolutely no idea what they're talking about when it comes to farming, what it means to be in the farm, what it means to be in the dirt. You know, you get a lot of Silicon Valley technologists who are looking for a problem to solve instead of experiencing a problem and then looking for or building a solution. And those are the pitches where those are an automatic no or red flag for us.
So interesting spaces right now are something that I think is cool. I'll pick somebody that's not here. Just
They're all awesome.
Yeah. I don't want to pick a favorite, but just one that's kind of recent that comes to mind is a large capacity spray drone. And I know that they're called Rogue AI, and they actually went through the AgLaunch cohort this year. But and I know we've all heard the spray drone talk for quite a while now, but there's two things that I think are a little bit different now. So timing in the market with a spray drone. A few years ago, there was a lot that were trying to come on scene. Farmers didn't really know if they had a good way to use them because they only held a gallon or two, right? What am I going to do with a gallon of spray or whatnot? But they've slowly been gaining size, and farmers are finding ways to, hey, I can go spray fungicide with them that only needs 2 gallons an acre, but I'm going to have to come lay on the thing over and over and over again, but I'm willing to put up with that pain. So it seems like it's a tool that I can use. But now, so we've gotten like a little bit of the shock out of it. We're finding ways to use it, but with Rogue AI, they're not only large capacity, but they're also hybrid. So we don't need to swap batteries every time they land. They can haul, I think, like 600 to 800 pound capacity, stay in the air and really knock out a tremendous amount of acres. So that to me is becoming real and a real tool that could displace maybe some helicopter spraying or really many other facets of spraying crops. So that one to me is really interesting. But I'm also kind of like into the hard tech side of things and physical cool stuff that I can watch. But as far as like failures, I can't think of like one that was like, oh, this is awful to see pitch off the top of my head. But what I would say is same with what I was going to say, what Liz was kind of saying too, was if they have a technology that they're trying to find a market for, that's usually a pretty big struggle. Like, we really like to see them identify a problem and build a really good solution for that problem. And then the other thing I will say, as far as disasters, we focus on early stage, but as some of the companies move further down the line into later stages, some of the companies have lost their founder as CEO, whether it was like a board decision or whatnot, and that to us so far has been really traumatic for the company, and hate to see that happen.
Yeah, on the successes, one company comes to mind that we invested in last year. It's a company called Flow Vision. So they use computer vision and laser technology in the processing plants. So not only can they optimize the input or what comes out of the processing plant, so all of the cuts are uniform, but you're also decreasing the time it takes to get a worker up to speed on the job that they're doing. What I think they did really well is they were incredibly capital efficient. They weren't raising a significant amount of money. They weren't over-raising. They also had a very clear milestones of this is what we're going to accomplish. They accomplished what they set out to do. They reached profitability, and they've now had a very large Series A fund come in and say, we're going to preempt your Series A because you're meeting your milestones, you're executing on what you're doing, and you're not overselling the value. And I think that's really important. On the failure side, just echoing what Liz and Jordan said, I think we see a lot of very well-polished pitches, especially when you've got these ex-Facebook, ex-Google, ex-Tesla engineers coming in, building really, really fascinating technology. And then they come and pitch into our group where you've got this network of farmers, producers, all from the Midwest, and they're like, yeah, that's not gonna work on my cornfield here in Iowa. And so it's very much a really cool technology searching for a problem. And I think as investors, it's really easy to get swept up in a very well-polished pitch. It's easy to get swept up in, oh, this well-known fund is leading this round. They have a huge, it might be like a $50, $100 million fund. And so you're like, oh, they have lots of capital to keep supporting the company. They're based out in Silicon Valley. And what we've realized is you have to have the farmers around the table because you can be really good at fundraising, but being really good at fundraising does not mean you're going to build a really good company.
Great answers. That was good. I want you to talk a little bit about hype issues or things that everybody's kind of like chased after that don't make sense, and kind of how do you insulate yourself from jumping onto that bandwagon, whatever the bandwagon is, and how do you kind of think, how do you differentiate through that? And I think you all know you guys have insulated yourselves from this as a group of farmers, but what happens in this space is you've got a few leader investors, and then everybody else just kind of follows whatever the trend is. And they act all pompous. You guys, like, they act all pompous like they know everything and they're really smart, whatever, but they're pretty much following whatever the vibe is, whatever. So folks have invested in, what essentially are greenhouse operations as if they're venture plays, stuff like that. So I'd love to just talk about some of the hype areas and how you mentally keep yourself from jumping on the bandwagon. My question makes sense? Okay. Why don't I'll make it easy. We're going to go back this way. Sorry to put you on that way, but
No,
you're
that's
not
okay.
guessing your order.
No, that's okay. I mean, I think when we think of ag, when you look at some of the things that have received a lot of capital over the last 10 years, we've seen a huge hype run with indoor farming. We've seen a huge hype run with alternative meats and alternative proteins. We've seen a huge hype run with climate tech solutions, probably more recently. And I think there is definitely viable solutions in all of those categories, but not to the extent for the capital that they raised. And that's where I think we're fortunate in the Midwest, and maybe we think about things differently because we tend to be a little bit more focused on profitability. We tend to be a little bit more conservative, quite a bit more scrappy when I look at what the founders here in the Midwest have raised compared to founders out on the coast. There's a drastic difference, but I think having that scrappy mentality, making dollars go further, actually sets the founders up for better success, because when you look at just food and ag markets in general, we don't have massive billion-dollar exit potentials. And so if that's the trajectory you're on, it's already set up to fail. And so I think that's how I would think about it. I don't know. I'm going to pass the microphone now.
Yeah, I want to make a comment about, did everybody hear what she said? It may be that these companies, and it would be great for all of us, they might grow to be a $100 million company that employs 50 people in Mason City or Clear Lake. We can get, for the level you all and us are all investors, we can get a multiple on that. It does not have to be a Facebook. And I think that's one way of insulating our strategy, is going, we don't have to chase it the same way because maybe our outcomes are different. And this is a little bit of a, but you were mentioning earlier, just getting young people back into communities. Well, that's a multiple we all care about, that if we could get a 3 or 4x on our capital, we're actually outperforming the market, by the way, if we did that, but we can do that and do things like create more opportunities for local entrepreneurs. So I'm just kind of pointing, like, that's a great way to do. We're just not going to do the hype because we don't actually believe in it, is a good answer.
Yeah, and I think when you play early, like, you have a lot of opportunity to make those multiples, because most ag exits are not probably 100+ million. They're going to be in this $20 to $80 million range, and that is a perfectly okay outcome. Like, you can very much still get your return, and those founders are solving critical problems, and they're making meaningful impact on the farm. And I think that's, really important.
Yeah, I mean, I think you guys kind of nailed it already, but I'll just try to add maybe a little bit of like the ag venture side, how we maybe try to insulate a little bit to trends. Well, I guess you could say, a lot of people would say that a trendy space right now is biotech or biologicals, but we think that there's huge opportunity in that space, so we are still very active in like trying to understand what the opportunities are there. So we're going maybe a little against the grain on that one, but otherwise, like at Ag Ventures, we do have farmer members and like our board, and we have an investment committee that we bring our deal opportunities to kind of talk through a lot of these things. And we've got a really good committee that does like a good job of coming at it from a few different angles. And so for us, it probably doesn't really matter if it's a trendy market. We're going to look at them from our mission standpoint either way. But back to like the tremendous amount of funding that Silicon Valley does. So we just invested in a company called Soil Action, and the co-founders of that company previously founded Plenty, which is an indoor ag automated greenhouse system. And they were telling me about that, and this is public knowledge, but for that company, they raised like close to $1 billion to bring that business to market. And I think like when there's that much money pumped into something like that, there's probably a tremendous amount of waste. And like Mikayla said, if we can focus kind of on the Midwest to look at this, we can probably be a lot more efficient with the money that's invested. But I'll stop.
I think just to kind of give the venture context to this is like I sort these category, the AgTech sector by kind of upstream and downstream. And I think in the Midwest, we focus a lot more on upstream. We focus on things that are closer to the farmer, closer to the lab, because those are the things that matter in the production of food and fuel sources. And then I see more downstream where all of the categories that you mentioned, that's where a lot of the hype is in those downstream, because they're closer to the consumer and what the consumer is demanding. And there tends to be sometimes a disconnect between, where consumer trends are heading and what actually matters on farm, right? And so you see, too, in the Valley, the funds are much larger. They need those billion-dollar exits to support the returns they need, whereas in the Midwest, we focus on smaller size funds where we can get smaller exits that make more sense here for us. And so the alignment of the investors that are investing in a company matter greatly as well. And so to insulate ourselves from that is, when we're investing in something, well, who are the lead check writers? What size of a fund do they have? What kind of an exit do they need? How much money is this company going to need to get to commercialization? And does it make sense for us to be a part of that, right? And is this a downstream play or an upstream play? We tend to stay in the upstream space because we focus here on the Midwest, and that's what matters. And so we're able to insulate ourselves from hype just by focusing more upstream that way, but also, finding out who are the investors, what are they interested in, what's their kind of thesis around this, what's their vision. But then we're also, we, much like Ag Ventures and ASC, we take a lot of stock in reference checks. Like, we're always checking with customers, actual customers, or, trial users to figure out, like, how is this working? What's the value that it's delivering? Does this business model make sense for you? Is this something that you can afford to use, or is there something else that you'd rather prioritize? Is this a nice to have versus a need to have, vice versa? So I would say things like that. Yeah.
And I'm going to address the hype again, but let's put our farmer hat on, right? How many people have had a greenhouse before and ran a greenhouse? Anybody in Iowa? Okay, there's a couple. You can put your farmer hat and go, it doesn't matter how fancy your lights are or how, if you're using a little renewables to lower electricity, high CapEx, you're building something that your plants are indoors. Maybe you could sell the product for 10 times as amount, but you think about that. We have a company, Plenty, raised $1 billion. This was in the Wall Street Journal yesterday. 3 bankruptcies of the big 3. They raised $1 billion each, which means, think about what a 3X is on that. Well, 3X is nothing for these VC people. They want a 20X or a 30X. They're literally, and people, think about this, right? This is the puzzle of how crazy this world is that we're in, that as a group of farmers and working together, we can solve. And so it's a hype, but the physics don't even make any sense. But that's $3 billion of venture in that you need to pick a number, $30 billion out for, you could have the fanciest widgets in the world and you could charge 50 times the amount of lettuce. The physics don't add up. Everybody track with me? So this is the space that we're operating in, and the space where I'm going to keep saying we have a distinct advantage because we understand the physics of farming and what the multiples. I'd love for you to add.
Yeah, I think Liz brought up this point, and you were talking about it too, the alignment between the investors and what you're investing in. And I think this is where a lot of the coastal funds, there's that disconnect of their LPs are not farmers. They don't understand the cyclical challenge and how slow the industry moves, and it's a very mature, fragmented industry. And so as farmers investing in things you understand, you can have more realistic timelines and expectations with, okay, this product is not gonna be built and sold and scale in 12 months. That's just completely unrealistic. And so if we put more realistic timelines on the industry that we know, I think it sets up everyone for far greater success, and it just aligns everyone on the right path.
We're going to have 2 more sets of questions. The first one, and I'm going to start there and we'll come back, is just going to be, if you're an entrepreneur, we've got a lot of our but when you think about mapping out a path to talk to VC and move, just any advice, and if you're new and you haven't been doing that, just how do you approach venture capital? How do you map out who to talk to and when, or just any kind of thoughts on that?
Yeah, I think the way you approach fundraising is, I think first and foremost, you really do have to have an understanding of what being a venture-backed company means, right? When you take capital from investors, you are not just giving away equity in your company, but you're also handing over forms of governance for your company, right? And so thinking about entering into a business partnership with your investors, you want them to be people that you're aligned with in the long run. But are you the founder that is going to be able to scale to be a 10, 50, $100 million business, and what venture investors are typically looking for, right? Are you that founder? Do you have that drive? Do you have that execution ability? Or, and that's fine if not, but you do really have to kind of come to that understanding. And then as you're approaching fundraising, you treat it very much like you would a CRM or sales funnel. You are vetting the investors that you're talking to just as much as they're vetting you. Are they the right fit to enter into a business partnership with? What are their expectations for an exit outcome? Is that what you want to drive to? Is your vision aligned with their vision? Do they add value to your management team? Could they add some skills that maybe you lack? I think those are all really big things to consider, but start talking with venture firms early. Even if you're not ready to raise capital, building those relationships early so that when it does come time to raise capital, it's a warm relationship versus a cold relationship is very helpful.
Yeah, I don't have a ton to add to that. That was really good. I'm thinking maybe one thing is on the founder side, make sure that you ask questions about the fund, and Liz kind of said that, but and start early, and you want to come across as the person that you're also trying to match make, like you're not just trying to sell yourself to them. And so you want to be able to make that decision and have a lot of options and try to identify the right VCs that you think are best for your mission. And also one thing that is really important in a pitch is to make sure that you explain your background as the founder and why it's important to you to what you're doing, because sometimes that gets overlooked, and the founder background, history, their passions are like very important when it comes to making these decisions.
I think everyone always says, founder-investor relationships are very much like a marriage. When you're taking dollars from someone, they're with you for a very long time. And I think what a lot of founders don't always do well is realize it's not a transaction. You're not just coming to me for a check, but it really truly is a relationship, like Liz said. And it's much easier to invest or reinvest in someone who's putting the effort in from a communication standpoint. Are you sending out monthly or quarterly updates? Do we know how the company is doing? And can you do that for future investors down the road? Even if it's an investor who wrote a small check, oftentimes they have a really big network, and if you keep them up to date, they're willing to make those intros, and the more warm intros you can get, the easier it is to fundraise. People like to invest in people and who they know, and if you've got that relationship, it's just a lot easier. And so I think that's where I see founders coming to investors when they're like, I'm either closing my round or I have 2 months of runway and I need more money, and it's like, well, that doesn't work for anyone's timeline, and why didn't you come to us 8 months before? So I think that is incredibly important. And then just like Jordan and Liz were both saying, is just know who your investor is. As a founder, it's easy to just kind of try to cast out a wide blanket, but if you're just kicking off your fundraise, you should spend all your time with people who are willing to lead around and actually set the terms and write a check, not the people who are necessarily going to be follow-on investors, because you want to maximize your time, because time is against you, and that is the number one thing that you can control. And investors are really bad at saying no, and you've got to figure out how you get them to move through their process or get out of their process and get to someone who can set terms, write a check, and help you get across the finish line.
Yes,
Couple more
please.
things, just some attributes of like good founders as they're talking to venture capitalists is, I would say, in your pitch, you have to show focus, whether by geography, and that's crops, or by customer segment. It's really important to show focus on what initial problem you're solving first, and being hyper obsessed with that problem. It's wonderful if you want to go into other geographies, other markets. That's the grander vision, but you first and foremost have to show focus, because what Mikayla mentioned earlier on, focus on profitability is going to be so key in AgTech moving forward. Venture is getting tighter and tighter with AgTech. We're seeing CVC shut down. We're seeing other funds not able to raise, so it's going to be a smaller market. There are going to be less dollars available to companies, and so you don't yet have to be necessarily profitable, but you do have to show that you have a really good grasp on your unit economics. And what I mean by that is that you've got a positive, profit margin, or not profit margin, but positive unit margin on your what you're selling, and the cost to make that, or the cost to acquire those customers, right? And if you're not yet profitable, like, how are you going to get there through your focus and how you are serving your customers? And then be able to very clearly articulate that focus and how it translates into that bigger vision, I think, are just great attributes for a founder.
Anything else, Jordan? I was going to add just a couple of things that just builds on. One is, you should be able, if you're a founder, to map out the people you need to be talking to. I've got this biologic, and now I know Bob that's working for this fund, that's how he spent his career. This is not with AI and all the tools we have. You should be able to kind of know who you need to talk to and stage over time. So you're kind of, which you got to this a little bit, all of us, you should be able to be ahead of it. I also think there's this myth of we have to act like there's no chance of failure and it's all perfect. And I'm looking for somebody to explain, I can see it. This could be real. If it's real, it's significant. And here's the things of why it might not work. Because we're asking for some people to invest in things that by nature are not real. This is not private equity way down the trail where it's already rolling. Somebody's got an idea. And so just that vulnerability of like, you want to bring the investor into the actual story, that'll automatically differentiate you from all the BSers, period. And you want to be their resource. You mentioned kind of like it's reciprocal. You want to be the person they call because by nature, like your technology might not be there, but if you're not the expert in what you're doing, the technology is not going to make you an expert. You better be an expert before you come talk about it and explain how you fit in the universe and where you fit. So I think it kind of dovetails. Last kind of set of questions, and however you want to address this, but kind of where do you see things in 10 years in the ag space or 5, and like what's going to get there? Is it a technology, is it an approach? And so you call it theory of change or just your crystal ball, but just some sense of what it might look like and what it's going to take to get there.
Great. So I think in order to bring all of these new technologies to market, I think we need to better align like raising capital and VC expectations, and whether that means we need to look at different financing mechanisms, or look at how VCs get more realistic returns in a time frame that actually aligns with the ag market. I think if we don't come to some sort of middle ground and figure out how we bring these technologies to market, we have a lot of really critical problems that need to be solved and technologies that can do it. It's just figuring out how do we collectively support them to get there. And we're already starting to see this. I know at Ag Startup Engine, we're thinking about alternative financing versus raising pure equity. Maybe there's some revenue or milestone-based financing where we can get, a 3-4x return in a time span that aligns with a fund, but the founder has the capital to keep going when they maybe couldn't have raised traditional VC funding, because right now it's a really shit time to fundraise. We have a lot of funds shutting down because their returns don't look great, because we have all these billion-dollar companies that went under. And so I think we've just got to figure out how do we actually support the technologies to get to market.
I need to point out, and I'm like a very energetic person, so everybody right before lunch when we're like I need to point out, if we're going to make a play, this is the perfect time to do it as a group with farmers and aligned capital because of these failures. That means people are looking for other areas and all that, and there are clearly opportunities. I mean, we all know this. I mean, we've got 1.8 or whatever it is trillion dollars of farm assets still owned by family farms. That's massive leverage if we can do this the right way. So I just want to point out the failure of the AgTech system. Most people are running around going, oh, we can't raise capital. Bullshit. We can, and we can do it right, and we can actually game the way that it's been done up till now. So I want to point out these are all the opportunity for us.
Yeah, I mean, it's the best time to put money in the ag market. For founders, it's probably not the best time to fundraise, but as an investor, it's the best time to put money into the market.
Yeah, so I do not have like a great answer on what it's going to look like in the next 10 years at all. There's a lot of really intriguing technologies and things that are coming, and there's no way for me to pick like a winner of any of that. But David Friedberg, if anyone follows him, he called this year the year of the robots, I think, or automated robots. So I do think that there's something to that. Like I talked about timing in the market and another question, but it seems like there is real opportunity to adopt robotics coming up with just the advancements in AI and computing power and all those sorts of things. So we're going to see more and more of that. Another passion part of my vision is things like we heard earlier, which is more opportunities for our local farms. Things like what Landon is doing with Green Acres Milling, with Zach and Stock Cropper, Jackson with Midland Co. and the shrimp. Those are all new opportunities for farmers, and I really hope we continue to see more and more of that. But some of these other technologies, like Pete and I were talking earlier, are what are going to enable those opportunities as well for keeping families and kids on the farm. So
I think there's 3 things that I think will change the way AgTech is done in the future. And I think, AI is obviously this big word that's thrown around, but it's come so far that I think AI is changing the speed and the cost of innovation. I think you'll see software costs, the development of software, lowered to a point where companies can get to commercialization faster. But you'll also see the ability to use the data that we've all been collecting for so long in so many more impactful ways, and that will change the way precision technology is delivered, even in the biological space, like using AI to determine what biologicals are going to be most successful in the field, and so changing the way those are commercialized. I think that's a huge opportunity. Secondly, I think financial technology in the ag space is a huge opportunity as we look. I think, the history of AgVA and the co-op model, right, of you all taking control of your destiny and creating an opportunity. I think that the next 5 to 10 years of agriculture is going to be kind of not necessarily upending, but a reorganization of our conventional systems, supply chain, value chain, et cetera. And we're going to need better financial solutions for our farmers to be able to access other markets that aren't dependent on maybe the way things are done today. And then thirdly, I think just the farmer adoption curve in ag is, I think, the biggest risk to ag technology. Not in a bad way. I think we just need to be better at connecting farmers to where innovation is happening and connecting where innovation is happening to farmers. I think the voice of the farmer needs to be heard in AgTech, and that's where Ag Ventures and AgLaunch thrive. And I think adding the fund to that model is so impactful, and I think more co-op models like that could be really helpful. What ASC is doing and bringing the retailers, the farmers in, I think that is going to be so much more impactful to the success of AgTech in the future in the next 5 to 10 years than maybe anything else.
Great. Well, we're about to lunch. I wanted to ask one question, and then we're going to wrap up. And if you know me, I'm a very emotional person, so my question might lead to a little emotion from my side. But how many people were here 26 years ago when you made the first investment? Is that okay to raise your hand? How Mark was here, Sterling? Okay. We have one data point from 26 years ago that said we're willing to put farmers at the forefront. We're going to make this investment. And this really is an emotional moment. I hope you see this next data point, 26 forward, where you've got Liz now as a principal on a $600 million fund with the same morals and the motives and the goals we have that came through your organization. Jordan on deck, 2 accelerators, which you picked the right 2 to invest in. You've got this crazy farm kid from Tennessee that's come up here with these ideas that we're now picking up members across the country. And so it's going to be hard to have a crystal ball, but I hope you can look at that first data point and then look at what you see here. This isn't just a group of VC people. These are people that you've helped create, just like you did the ethanol plant. So one, you should be really, really proud. It actually doesn't get better than this. There might be a bunch of people talking, but this is as good and smart and sophisticated a group as you're going to find to think about this. And so I hope as you're a member, board member, like we're entering the next kind of wild west of where ag's going, but I hope you can take the data point of where you were 26 years ago, what you see here and with these companies, and kind of go, that's the right shot. Might be a little risky. We might have to do some weird stuff, but that's the shot that we're on. So I want to leave you guys with that. Also, just thank you from AgLaunch for being awesome partners. I've told you this before. I've chased people for 30 years to try to work together. Jude Conway and you all were the first one to send me a slide deck and go, we want to work with you. Still the first one. Nobody ever does that until we got in the venture business. So there's no way we can overstate how much we appreciate you guys as our first partner that's allowing us to grow AgLaunch and grow it together with you guys. So thank you, panel. Y'all did a great job. It was awesome.